Bitcoin is advantaged to those sovereign securities in a variety of ways. One is there's no counterparty, so you don't have a council that sets monetary policy. That's a big advantage. The second is there's no nation state behind it, so that's a big advantage. The third is it is a asset you can self-custody, right? Bitcoin is sound money, and Bitcoin is thermodynamically sound financial asset and a thermodynamically sound strategy. So people haven't had a thermodynamically sound saving strategy up until now, right? The closest thing to sound money in the current world before Bitcoin is scarce, desirable real estate. That's the closest thing.
Michael Saylor's bold Bitcoin prophecy. Picture this: Bitcoin worth $5 million. Michael Saylor, the crypto evangelist and MicroStrategy boss, is making waves with his mind-boggling Bitcoin forecast. Saylor lays down the law. 3 things need to fall into place. First up, the launch of spot Bitcoin ETFs. Second, banks need to start cozying up to Bitcoin for financial services. And finally, we need Uncle Sam as the US government to regulate cryptos. Good news, 2 out of 3 are in the pipeline. Word on the street is that the first spot Bitcoin ETFs are rolling out soon. FASB, Financial Accounting Standards Board, is also cooking up some fresh crypto accounting rules. What about those banks, you ask? Well, they're eyeing Bitcoin, especially when they see other slick financial systems like XRP on the block. Deutsche Bank's already in the game and others are following suit. But here's the kicker. Banks need to start lending money against Bitcoin. That's when things really get cooking. Now let's talk numbers. Saylor's prediction is 50 times higher than what the so-called experts are saying. Sounds crazy, right? But hey, in crypto, anything's possible. The battle of Bitcoin predictions. In the world of Bitcoin predictions, it's a battlefield. Bitcoin, a social media guru, thinks Bitcoin won't hit its peak until after the next halving in 2024. He's eyeing a new all-time high, setting his sights on $250,000. Meanwhile, the Glassnode gang suggests the recent crypto roller coaster is thanks to the U.S. Consumer Price Index. Brace yourself for levels around $27,000, but $30,000 could be ultimate destination. Hold on to your hats, though. Some folks are saying Bitcoin could drop to $21,000 to $23,500. Others believe in a twist of fate, a black swan event, and the possibility of new all-time highs post-November 28, 2024. In this crypto arena, opinions clash like titans. It's a world of volatility, ever-shifting, and investors must navigate the storm with care. XRP, the chosen one? Ripple's Brad Garlinghouse has a revelation. XRP could be Bitcoin's heir, but only if we solve a multi-trillion-dollar problem. Ripple's been cozying up to regulators and banks working on cross-border payments. Unlike some tokens that just play the market, XRP has a big job to do. The future's uncertain, but in the crypto realm, that's the name of the game. So which prophecy will come true? Let's continue our discussion with Michael Saylor.
The accounting treatment for Bitcoin up until probably 2024 is as indefinite and tangible. And so if you're a GAAP accounting company in the Western world, generally what that means is that if you were to acquire Bitcoin on your balance sheet, then when it trades down, you'll take the losses. And when it trades up, you will not recognize the gains. And so it's a one-way ratchet function on a balance sheet. You will mark it down to the lowest price it ever traded at in the history of your ownership of it. And then you will never be able to recognize the current price that it is valued at. So it creates a degree of opacity and confusion in the balance sheet. And then that confusion in the balance sheet also washes through to be confusion in the P&L. Because if you actually have a example where Bitcoin trades down, you take the loss and it becomes an operating loss. So you could actually buy Bitcoin, have it trade down $50 million, and it would offset $50 million of operating income. And so the P&L of the business that generated $50 million of operating income would look like it generated $0. So you're not breaking it out as an investment gain and an investment loss. You're actually combining your losses from the investment in Bitcoin with your losses from the operation of the business. And that means that if you're an objective observer, you can't tell whether the operating business made or lost money, and you can't tell whether the investment made or lost money. You're generally going to be biased toward presuming that the business lost a lot more money than it did, because when the business makes investment gains, it won't show them, and when it makes losses, it will show them. So the ownership of Bitcoin on the balance sheet under indefinite intangible treatment will always be a drain to the balance sheet, a liability to the balance sheet optically, and it will also be a liability to the P&L. This is the kind of treatment you would give to a very scary, exotic asset that you didn't want people to acquire. And so generally, it's the bucket you put in anything that's new or different, misunderstood, or you just don't have time to deal with. Between the years 2020 and 2023, it became increasingly clear to the accounting establishment that there are a lot of mainstream companies that wanted to acquire and hold Bitcoin. So MicroStrategy was the first really big public acquirer of Bitcoin, but Block acquired Bitcoin, and then all the Bitcoin miners acquired Bitcoin, and then Tesla acquired Bitcoin, and this became a public issue. It was taken up with a lot of community support by FASB. After a very thoughtful process, they came to the conclusion unanimously that they should give Bitcoin fair value accounting treatment rather than indefinite intangible accounting treatment. The latest communication on that indicated that they'll make this mandatory for all public reporting companies as of December 15th of next year. So as we go into fiscal years that end after December 15th of 2024, this will be common practice. And between the beginning of 2024 and the end, it'll be optional, I think, for companies to decide whether they wish to adopt it. And the significance of fair value accounting is that you account for Bitcoin similar to the way you would account for a portfolio of securities on your balance sheet. It kind of works like this. If I buy $1 billion of Bitcoin and it trades down 50%, then in that period, at the end of the period, you'll value it at what, in this case, it would be valued at $500 million. You'd be holding $500 million on your balance sheet, and you would have a $500 million investment loss. But you would report the investment loss separately from the operating gain or operating loss of the core business. So now you would see there's an investment with an investment loss, and the fair value at the end of the reporting period is this much, $500 million. Now, if you go a year further and you regain that loss and you double it, you would now be showing $1.5 billion worth of investment gains, and you would have $2 billion on your balance sheet. And the operating losses or gains of the core business would continue, unobstructed or unmodified. So now you have two parts of the business. You have the balance sheet part of the business where you have investment losses and investment gains, and you have the P&L or the operating side of the business where you have operating losses and operating gains. This is really critical. Because if you have a healthy business, let's say Facebook or Apple, and you have a lot of cash flow, you're never going to want to present the business as though it had no cash flow or it had no operating profit and it was losing money by virtue of owning a volatile treasury asset. So the volatility of Bitcoin combined with indefinite and intangible treatment makes the holding of it toxic to a conventional company. A conventional CEO, a conventional CFO would never want to hold anything more than a trace amount.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.